Okay, so what is volume? It's a measure of a trading activity or participation. And this is important. We should use it as a guide. A very fun fact that means absolutely nothing is volume doesn't come, the volume you see on your broker doesn't come directly from the exchange. So it's not actually 100% accurate, but it's the best we've got. So again, that's a fun fact that you can't do anything about. It is the best we've got, but it's not entirely accurate because it's not come directly from the exchange. Now, the volume we see doesn't come from us as lowly retail traders. It certainly comes from those big boys with a lot of money, which are institutions. And more volume does not mean more buyers than sellers or more sellers than buyers. It actually means that there's more buying or selling pressure. And high volume doesn't mean that the market has to move. Tell us more, I will do. Okay, what it can show us, and this is the main thing I want, if you don't understand, to take away from this presentation today, is the three moves that you can help by using volume. The first is exhaustive moves. The second is climactic moves, and the third is igniting moves. So very powerful. And when I started, I never used to use volume. It's something I kind of picked up as I went along, and something that kind of was like kind of a light bulb moment in my personal trading, and certainly does help in all three of these scenarios. So we'll go through exhaustive moves first. And what are they? So we've seen recently, over the past couple of weeks, actually, that the yen has been very weak. Okay, so the market, certainly from a daily perspective, and I'll show you this after, has been kind of moving up and up and up and up and up, right? Now, that doesn't mean that has to come to an end, but can we use volume to determine when this very healthy trend to the upside is potentially starting to falter? Okay, so we can see here by the diagram is if we've got a healthy trend to the downside. Remember, this is not unsustainable. This is not climactic. This is a healthy push corrective trend to the downside. Okay, we're seeing here volume contractive from a general sense as this trend continues. Okay, once we get to the bottom, okay, you notice that even though we are still producing lower lows and lower highs, i.e. our Dow theory downtrend, very simple Dow theory downtrend, we're noticing that volume increases during that section. Okay, so if you see an uptick in volume as price continues to fall down, but certainly at the end of this extensive move, it may be an indication that institutions are possibly stepping in to take this currency pair, equity, whatever it is, higher at the end of that exhaustive move, because sellers are becoming exhausted. You got to think about the fact of profit taking, etc., might be happening roughly around this area. Possibly institutions down here buying this currency pair on a discount, accumulating positions before taking this higher. So that is an example of an exhaustive move in terms of volume. So looking for real healthy trends to the downside, volume contracting, i.e. it's healthy up here. We're moving quite well. Coming to the end, possible profit taking, albeit we're still moving down, we're getting that contradiction in volume with an increase in volume before potentially moving this pair higher. Okay, so that's the first example. The second example, climactic. Now, these are easy. No, I'd say they're easy to spot, but they're very powerful to spot. And it's actually the premise of a strategy that I'm currently developing, which is not using in real money yet, but it's currently in progress, of my fake out strategy. And I always use the same example. And I mean, it's years old now, but if you think about Bitcoin and crypto a few years ago when it hit 20K, that's a proper example of a climactic move. What you'll notice as well is a pair that does like this is the euro. So the euro loves certainly a counter trend move, a kind of climactic move, unsustainable move, and then a proper snapback. And this is what we're looking at in terms of climactics. So notice here as trends, healthy trends, move to the upside, okay? We've got, let's say, a 20-period MA or whatever it is, roughly around price action. Again, a healthy upward trending environment. And then what we also get, what we get at the end here is a move, possibly based on news, whatever it is, that kind of moves very sharply and unsustainably to the upside. You'll notice here, if you have moving averages on your chart, a very large gap between price action and this 20-period SMA or whatever it is, 21 EMA. there's that large gap between what we have in terms of price point is at, and where that moving averages is. Okay. So when you see that on the chart, and if I bring something up, see if I can bring this up. Let's say, for example, in the euro, I'm pretty sure I could find an example quite easily. Let's say EuroCAD. Okay, when we're getting moves, no, that's a bad example. Let's try Euro USD. So we're getting moves kind of like this, okay, against, remember, important is that this is against the trend. So notice it here. Here is a good example, okay? This is against the trend, but look at this price action. Look at the gap between, let's say, a 20-period moving average and where that price is, okay? So movements essentially from a line perspective that looks like this, climactic moves. Notice here as well, and again, I'm just bringing up the chart here, so this may be a lucky coincidence, where we're kind of getting volume roughly coming in at the top of this structure. And what happens is we snap back down. If you look at it here as well, not to the same extent, but there is a slight gap here between price action and that 20, and that movement quite climactic to the upside. So if you notice in the euro, it does like this. So those are climactic moves. In terms of volume, as I said, we're looking at higher volume coming in at the top of that climactic structure in what is an oftable susceptible is to that snapback and move down, i.e. potentially a fake out trade. So if we use this, and this is for me as a breakout trader, okay, let's say we take a breakout or when price action is coming up here, and then we all of a sudden we get a pretty climactic move on a break of a key level. So this is the premise of my fake out strategy. If I see volume coming in up here, okay, for me, certainly if this counter trend breaking a key level, you know, and I get a catalyst for entry up here that says that maybe possibly an inverted hammer to move to the downside, that would for me would be a good indication because of that volume coming into structure, that large gap between the 20 SMA and price action, that this could possibly fake out. So climactic moves. And finally, our igniting moves. Now, this is what I use as part of my breakout retest strategy. And it is really powerful. And I'll show you a few examples after this. So what essentially are igniting moves is we have a healthy uptrending market. We've got a pullback corrective, igniting catalyst, signaling the end of the pullback. So within our Dow theory, movement up, corrective, movement up, corrective. What we're trying to figure out, and yes, you can use your Fibonacci moving averages with this, but also volume, figuring out that when are institutions coming back in to take this trend, again, furthering it to the upside. So for an uptrend, pullback, volume can tell you when potentially this pullback has ended. Okay, so ideally what we want to see on our volume signature is volume rising during this push to the upside, volume lowering during our corrective phase, okay? And then volume coming in at the bottom of structure here, telling us that potentially the pullback has ended. What we can also add into that, and how I use my breakout retest, is a catalyst. So very simple price action, i.e. our hammer bar, engulfing bar, morning star, whatever it is, very simple chart patterns that tell us a reason coming on high volume for a push to the upside. So on my breakout retest, okay, if I get a pullback breakout into here and I get my catalyst, let's call that a hammer bar, on higher volume, so we get a push through, high volume coming in here, lowering volume during our retest, and then an uptick in volume on our catalyst, this for me is a good sign that institutions are happy with this breakout retest. We continue to the upside. Okay, so igniting moves, exhaustive moves, and climactic moves. So as I said here with the igniting bars, engulfers, hammers, morning and evening star, dark cloud cover, rising or falling 3 or successive bullish or bearish candles on volume. That is what is known as our igniting bars or our catalysts. And here I talk a little bit about on-balance volume, but I'm not going to go into that today. That's a bit more for stock trading.
If you're an aspiring forex trader, we have a free Telegram channel where we're sending trade alerts, ideas, and updates on the forex market every single day in our free Telegram channel. Click the link to join our Telegram, 100% free, and we'll see you inside.